Hey everybody, it is Wednesday, the 6th of April, 2016. And as we've been saying, this market is still in an uptrend, making higher highs and higher lows. And until it breaks that pattern, we're going to continue to see that we will treat it as innocent till proven guilty. We've got the rising 10, 20, and 50-day moving average now. And these pullbacks have been shallow. We've been pulling back into prior ranges where resistance is finding support, and the path of least resistance continues to be higher here. So today we got down to took out the lows from yesterday and quickly recovered, and that puts this market again back above the 5-day moving average. So we were getting cautious because we were below the 5-day moving average, but we hadn't seen a pattern of lower highs and lower lows below a declining 5-day moving average. And in fact, this level that we've been looking at 204 has held as support, and that's our measurement that we're going to look at this market against for the next, I'd say, at least week or so. That as long as we hold above 204, we're going to look at pullbacks as just a correction through time, and expecting that it's likely we'll continue to see higher prices, and the trend line that we've been looking at still looks quite reasonable, probably for this run. The NASDAQ, for its part, pulled back a little bit today, but closed at new highs for the year. And that's the first time that we've seen that it's getting, well, it's not the first time rather, but we're getting into the level where we're about to close this gap. We also, of course, are still above a rising 5-day moving average. We have, we've seen that this market is stair-stepping higher as well, without a pattern of lower highs and lower lows. There's nothing to be bearish about. We can get cautious as we do when the market dips below that 5-day moving average, and we look for evidence that maybe it's going to fail for a potential short. But until we have that actual evidence, there is no point to being short. This market today was above the volume weighted average price for pretty much the entire session. If we look at today, right here, we had just a very brief period this morning where it was below the VWAP, and for the S&P 500, the same is true here. We were above that volume weighted average price for almost the entire session today, and there is no point trying to sell short when we have a rising 5-day moving average, rising volume weighted average price. So you can look at it as mixed messages, but the primary trend is still higher. The Russell 2000 added $1.22 today, and this market we see is right back up to the midpoint of what this little range has been here in the last week. But again, with a pattern overall of higher highs and higher lows. These lows of the last 2 days and that 20-day moving average will be important going forward, and we're going to want to see that 108.60 is a key level to hold. If we can hold that, then we continue to give the benefit of the doubt to the buyers. Right now, this market is, maybe not as good a shape as the S&P and the NASDAQ as it is at this prior little support here from last week, and we rallied right up to it, and that's where we have that 5-day moving average as well. But again, until we see a pattern of lower highs and lower lows below a declining 5-day moving average, it tells us that we just have to be cautious. It doesn't tell us to be bearish. What we want to see for this market to be able to continue higher is that it gets back above the 5-day moving average, and then is able to continue to make new highs here for the year, which won't be very difficult, as we've only closed above this current level on a couple of occasions here. So here's today's close, and again, it's only been a few days that we've closed above that. So new highs certainly don't seem unreasonable here, and it's going to be dependent upon this being held as our more important higher low right now. Below that, of course, we have this band of support. The semiconductors added 50 cents. They are also, continuing to show higher highs and higher lows overall. We've got the, this low, the higher low here, and this is looking like our new higher low within this primary uptrend. We're back above the 5-day moving average. We did see that this group had made a lower low, but that, you don't want to short on the open on a gap lower like that. And this market, it was also for almost the entire session, once we got back above that volume weighted average price. In fact, it was once we recaptured that volume weighted average price, the semiconductors stayed above the volume weighted average price for the session and squeezed short. So 54-ish is an important level in here. Biotechs continued to rally, and this is a group that we were looking at last week and the last few days as something that had the potential to continue to move to the upside. It has not violated any of the higher lows that we spoke about. We spoke about this one, we spoke about this level, and then we spoke about a stop here. If you're still holding some of this long position, I think your stop goes probably about 279-ish at this point. And finally, on to Apple, still showing higher lows and higher highs here. This is where I would suggest now that if you're still holding it, that your stop goes just below this 109 rather than keeping it down here. This looks like a nice little shakeout, and that would be a good place to measure your stops against.